What's up, guys? In today's video, we're going to be talking about financing. Financing for businesses. How exciting is that? Financing is so exciting because you got to line the financing up to buy a business. And there are so many different ways to finance, but you got to stay for this video because I'm going to be going over SBA financing, seller financing, crazy deals that I've done with seller financing, crazy deals that I've done with SBA financing. Is SBA 10% or 100% financing a myth? You will find out, and there are just so many cool gems I'm going to drop. So please like this video, stay, subscribe to my channel. I drop gems all the time. I try to give as much value as possible. So today we're going to start with SBA financing. How do you get financing through the SBA when you're buying a business? There are two types of SBA loans that I work on. Number one is the main one. About 90% of my SBA deals are done through SBA 7A financing. Maximum $5 million. Now, an SBA 7A deal, the term is 10 years. The interest rate is prime plus 1.5 to 2. It could be a little lower sometimes. It could be a little higher. Depends on your credit score. There's a lot of factors in there, but it's usually prime plus 1.5 to 2, which right now is roughly around 10%. It's a little high. The business is making 30%, doesn't matter. So that's the business side of the 7A. Now, to get qualified for this type of business, everyone wants to know that. It's about the buyer, but it's more about the seller. A lot of these business sellers, they don't show what they make on their tax returns. For an example, a local pizzeria, a local car wash, or a local laundromat. If they're really cash flowing $300,000, that's not what they're paying taxes on their tax return, because they're trying to write off as much as they could. So the bank is not going to look at their true cash flow. They're going to look at whatever is on their tax return. So that's why most of my deals are done through seller financing, because it's tough to get SBA. But when someone has clean financials, you can get an SBA 7A loan. But the bank also looks at the buyer side. If you're a buyer, you must have prepared your personal financial statement. You can go right on the SBA website and get a copy of a personal financial statement, fill it out, and really beef up your net worth as much as possible. And that's very important. You also want to build out a business plan. You can use ChatGPT. You can build out a nice business plan for the SBA. You also want to have your financials in order. You want to have 3 years of tax returns and 3 years of business tax returns if you have a business, and have all that ready to submit to your SBA loan officer. Now, SBA, you got your things, you got your financials in order, you got your PFS, your personal financial statement from the website, and you got your business resume, business plan through ChatGPT and yourself. Have that ready. When you're looking at businesses, you're going to need 3 years of business tax returns. You're going to need 3 years of P&Ls. You're going to need balance sheets. You're going to need interim P&Ls, year-to-date, POS reports. They look at everything, and they underwrite the business, and they want to make sure that the business can easily pay off that loan that it's going to give. So if it could get pre-qualified, and they're going to use your collateral sometimes. So say you own a property, they're going to want to attach, the SBA loan is going to want to attach to your property. They might want you to even get a life insurance policy. That happens a lot in a deal, where you have to get a life insurance policy and put them as the main person. So it's a very stringent process. That's an SBA 7A loan. Remember, key things to remember from all this. 10 years amortized, prime plus 1.5 to 2%. We're looking at roughly 10% right now. Down payment, on average, 25 to 40%. You're not putting 10% down. It's tough. Unless you're an experienced operator, you have another business close by, you might be able to get away with that. But average is between 25 and 40% down. And at closing, you're going to have to pay a guarantee fee. So guarantee fees are just fees that you have to pay. Usually they're 1.5 points. So if it's a $5 million loan, you're going to have to pay $50,000 to $75,000. Just pay it. It's expensive. There's also a prepayment penalty. So if you want to exit the SBA, they're going to want a prepayment penalty. It's just a lot going on. Number two, so that's SBA 7A. SBA 504 is another loan that I get done. It's property plus SBA. So you have a conventional loan plus an SBA 7A together. It's SBA 504. And it's a blended rate of commercial with the SBA rate, and you combine them together. And then the rate's going to be a little lower than a 7A, because you have the property attached, and it's over 25 years. And the down payment can actually be a little lower. It could be around 20%, 15%. in that range. So again, the business must show good financials for you to get the SBA portion. And then you have a conventional in the real estate. And there's no cap on a conventional. So that's SBA for you. Now we're going to jump into my best and famous and my most exciting financing, which is called seller financing, guys. 80% of my deals are done through seller financing because it's just so difficult to get SBA financing. And some of these sellers don't want to seller finance. And if they can't get SBA pre-qualified and they don't want to seller finance, then they might not be a real seller at the time. So it's my job to educate them and tell them, listen, there's a lot of benefits for you to seller finance. So you're going to get 5 to 7% interest on your money, on your loan. That which adds up tremendously. If you have a 15, 20-year loan, it'll be millions of dollars. We're gonna have a much bigger buyer pool, so we're gonna have a lot more people that can bid against each other. And if someone fails and messes up the business, you can get the business back as collateral. Plus, we can attach another piece of property that they own. It's a little risky, yes, but we really vet out the buyer, and you can always say no to the buyer, but it's a great source of financing, and deals happen much quicker through seller financing. On the buy side, it's very advantageous. You don't have to go through all the process of going through a bank, which is a very tedious process. You know, it takes 3 to 4 months to get an SBA loan done. On the seller financing side, it could take 30 to 45 days, so it's a big difference. Interest rates are lower, 5 to 7%. Terms are creative, structures are creative. You can have balloon terms. You can have balloon notes. You can stretch over a longer period of time. You know, there's just so many different things you could do. What I love about it is every deal is different. So, quick story time, I had a car wash. You know, we got the deal at $3.5 million. The seller was, said he was cash flowing about $500,000 a year, 5 to 600. We based it on that cash flow. We did our due diligence, 5 to 600,000. And then we crunched the numbers and we came up with a 30-year seller financing term, 5%, which brought it out to, I believe it was like 18 grand a month, which is about 215 grand a year. And it's cash flow 600, so what's left over is almost 400K. It was a 40% cash on cash return. That's how I look at the numbers. I crunch the numbers and I try to stay over a 20% cash on cash return when I'm doing seller financing deals. The SBA side can be lucrative as well if it's a high margin business. But the real goal is to push for seller financing. Deals get done quicker again, lower interest for the buyer. You have a very creative note and you have a healthy down payment. You know, you can get very creative with everything. And the goal is to get over 20% cash on cash return. And on the SBA side, it could be advantageous, but it's just much more difficult to get deals done because not everything is on paper. So these are the two alternative ways that I finance transactions. That's what I do. So I hope this video helped everyone that wants to learn about financing. I have so many deals that can be done through seller financing. I have deals that can be done through SBAs, SBA 7A, SBA 504. If you want to learn more about all this stuff, just reach out to me through social media. I am the Business Broker King. Like, subscribe, and thank you for watching.